Hello there, Maverick traders. It is Thursday, 8/8/24. This is Rob Reinhold, and we had a mellow-ish day today, so let's jump into it. In this session, we're going to be talking about what happened in the news during the day. We'll take a look at all the commodities. We'll take a look at all the markets. We're going to take a look at everything, and then we are going to find some setups. I've got 2 bull setups and 1 bear setup for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Today we saw a lot of bullishness come back into the markets, and let's really talk about what happened from yesterday's close. Remember, yesterday we had a really bad day. We gapped up, went up a little bit, and then sold off all day long to close at the low. It was a bad day, a bad candle. And then today, overnight, the Asian markets got better, the futures got better, everyone got a little bit more optimistic. So the futures were already trading up. And then at 8:30 a.m. Eastern Time, we got the jobless claims numbers, and this calmed the market down a little bit more. So the market was already feeling like it was in a good mood. It then got some news that helped it get a little bit better. And then during the day, we had Chairman Powell come out and say that a rate cut is on the table. I was talking with a few traders, and I said, look, let's wait and see until we see where the close is today. We ended up closing at the highs, and we had the Dow up 1.76%, S&P up 2.3%, NASDAQ 2.9%, Russell 2.5%. As you can see, just a big, broad move across the board. Oil up, gold up. We take a look at the advanced decline line. 3 out of every 4 stocks went higher. Again, very, very bullish day. Now look, this is just one day, so let's take a look at the charts. And you can see that, yes, today was a great day for the bulls. Bad day for bears, great day for bulls. But as you can see here, it's not really, doesn't mean anything. This doesn't mean anything at this point. We had this absolute disaster of a period. Monday ended up being one of the worst days I've seen since COVID. Volatility spiked. And then we got the next day where we came up but lost a lot of our gains. Next day we gapped up. We closed down our lows. And then today, we actually had a decent close. This is the first candle that I have seen this entire week that tells me, okay, maybe the buyers are back. These last 3 candles only confirmed to me that the sellers were still out there. Look, we've had a ton of volatility, a ton of news. I am not ready to jump on board the bullish bandwagon. But with that being said, I'm definitely not fully on the bearish bandwagon. My opinion of this whole thing is a down move. We got to be bearish, but I don't think this has a lot of legs underneath it. The reason is the economy is still stable. This is something I've learned over my 27 years. When the economy is growing and getting better, yes, the stock market will have corrections. They'll have pullbacks. Every now and then, it'll be 10, 15%. But you know what happens? If the economy stays strong, they recover. Is this the time that we are going to go into a recession where we have 2 where we have considerable negative GDP growth and we have people losing their jobs? Look, that's not here yet. That might happen, but it's not here yet. So I'm on the opinion that this is a temporary down move. We need to stay defensive and bearish at this point. But I don't think it's time to get ultra bearish here. I think this is going to be something we take a look back on and say, oh, that was a period of weakness in the market, but that was it. By no means am I saying, hey, guys, we're going to go back up to all-time highs. We're going to make new all-time highs. I definitely don't think that. I think we're probably just going to be hanging out in some areas. Is there one more leg lower? Possibly. But again, I'm not looking at this as the start of a bear market. Let's take a look at the NASDAQ. The NASDAQ has been worse. And if you take a look at these last candles here, This is the first candle that's closed at the high. So, okay, where do we go? We run up here to hit resistance, and then we get another test here and see if the sellers come back in. It's probably what's going to happen. But in the short term, I am feeling much better about the stock market and the equities than I was even yesterday, where I thought, oh, we're definitely not done with this selling. I still think you have to be super cautious. That's what all the markets are saying to you. That's what volatility is telling you. But I think we can take a look and see at this moment right here, right now, the market seems to be wanting to go a little bit higher off of that really, really nasty down move we saw last week and early this week. Green across the board, weakness in utilities, which is a defensive sector, and that's it. That's the only place where there was any weakness whatsoever. So I've got the market at -2. This is where I really love to talk about charts and how when you look back at charts, how it can absolutely fool you. Yesterday, the 20 and 50 had crossed. Now this is what's called a death cross. And any chart technicians who said, oh, death cross, that's a bear market. Guess what? Look what happened today. Oh, they uncrossed. So this is where when you take a look back and you're doing like back testing and you say, well, they didn't cross, so I wouldn't have done anything. That's actually not true. And that's a little bit of the problems with looking back at back testing is that these were crossed at the close yesterday. They were absolutely crossed and the price action uncrossed them today. So look, we're at a -2. We got to be at a -2. I'm not like at a strong -2 either. I'm trying to be as not bearish as possible. I follow very strict rules, so I am net bearish here, but I'm trying to be as not net bearish as possible. That's not even a word, but you guys get what I'm saying. Let's take a look at some potential trades. I found 2 bulls, and the bulls I found just look awesome. Just look amazing. Let me go back here if you want to take a look at some of the others. All of these charts look fantastic, but the one I want to focus on is Zeta. Zeta is a software company in technology. Now, we all know what's been happening to technology lately. Someone forgot to tell ZETA that there was a bearish move in technology, and you can see this thing is ready to go. We got this little bit of a pullback. It found some good support on a gap down, ran up. Okay, it's got some resistance up here in the 24, 25 area. There's no question about it. You can absolutely play a couple different ways. If you want to go out a little bit longer, I would do an August-September diagonal call spread. So like a 20, 25. So you buy the September 20, sell the August 25 diagonal call spread. That's a really nice looking trade that will just, as long as it hangs out in here, that's golden. You're going to have some money, and then on expiration on August, you get to decide, do I want to just hold the long calls and play it bullish if this market is starting to look a lot better and a lot more healthy, or do you want to turn it into a vertical, or do you just want to take the trade down altogether? If you do want to be in a vertical, like a 23-25 vertical makes some sense here, giving you a little bit of delta to the upside. Another trade that just looks amazing, this is in the healthcare sector. This is Exact Sciences. Just a beautiful high base after a fantastic earnings report. Look, I don't know if the earnings report was good or not. I don't care what the report said. All I know is people liked it. I always say it's not the news that's important, it's the reaction to the news. Just looking at the reaction of the news will tell you what people want to do. This stock most likely would have been significantly higher had we had a very strong bullish market. The fact that we've had a disaster, one of the worst periods of time, and this thing is basing, it's just telling me it wants to go higher. 60 is an easy short-term price target. So again, a 55-60 vertical spread. You could take a look at several other option combination strategies. Now on the bearish side, there are some decent bears there, but I recognize that if this market keeps bouncing, then a lot of these bears aren't going to look great. So my list of bears, I really focused on stocks that weren't bouncing with the rest of the market. So we've had a couple days of a bounce. I wanted to really find the stocks that aren't participating in the bounce, showing me that these are the most weak stocks in the market. And if the market turns down, these are going to just accelerate. And even if the market bounces, they're probably going to go sideways or move lower. This is HIMS, HIMS. I'm not saying that right now is the perfect entry. And in fact, we've got this little kind of hammer candle here. I expect there to be a day or two of a little bit of a bounce, but look at the price action. We've had mostly bullish candles the last 3 days in the market, even though they've closed off their highs except for today. No, this stock wants to go lower every single day. It went down today, lost 1.18%. So look, this one is just a matter of timing. Love to see it have a little bear rally, bounce up, maybe up to this 18 area, and then it's just a bear call spread. 16, 18 bear call spread, something like that. 17, 18 bear call spread. I don't have any shorts that I'm looking to get in right here, right now, but I'm starting to build watch lists here, looking for the things that have not bounced with the market. So what do I think about tomorrow? Okay, we got Friday. We got options expiration, weekly options expiration coming in. There could be some volatility. The market today held in really well, and there was buying all day long. As a professional trader, it is literally my job to make these calls. I think this market does hold in. I think the market holds in pretty nicely. And if we can close at a high on a Friday, I think that bodes very well for a continued bullish bounce going into early next week. If we sell off tomorrow and we give up a lot of the gains we had today, then I think that really leads to a sketchy Monday and Tuesday in the markets if we give back these gains we have today. Obviously, tomorrow's a big candle. I will be updating everyone in the trading room once we get that candle. That is the Market Roundup. Goodbye, everybody.